Right, Mike, I've just sent you the link on Skype. There, you have it. Okay.
Yes, yes, I've seen it.
Troublesome one, right?
I'll post it when you tell me to.
Okay, can. Thank you.
Okay.
Hey, Mike, actually, I got something. Why is it titled Coffee Break? Should it be titled Show Starting Soon or something along that line?
I'm also not sure. This is what they provided me.
Okay. Sorry, I'm just being nonsensical.
Okay,
Hi,
we're
good
live
evening,
now.
everyone. Okay, thank you. Hi, good evening, everyone. This is Lloyd speaking. Welcome to Optional Forex. Come to think of it, I might as well just change my right. Yeah. Anyway, the reason why I put optional is because I'm not that keen on sharing analysis. I think there are other shows like the Tea and Hot Sauce and Sunday Show and by others, they have already shared their analysis. So what I'm keen on is actually sharing indicators. So if it's not obvious to you who are watching right now is that one of the reasons why I'm keen on sharing indicators is uh, partially that's how I learn to trade. Yeah. And more importantly, because not that I really, really dislike price action, but to the point that how do I put it? Price action actually does provide me a certain of objectivity, so that I don't have to guess. Yeah, I'm well versed to read price and market structure, drawing my fundamental levels. Yeah. It's just that I'm still human being. I'm still human, so I still do dot my own analysis, my own trade. That's where the indicators comes in. I mean, after backtesting if the trading term works, then if the indicators does signal, I'll just really enter with the objectivity on my charts. Yeah. So anyway, less of that. So today what I'm going to share is actually, yeah, I think 2 or 3 weeks back, I see what do you want me to share? So I think the answer that happened was more towards the trend trading side. So I've been sharing a couple. So I'll be continuing sharing the indicators with regards to trend trading. So today what I'm going to share with you all is an indicator that is actually associated with a billion percent range. Yeah, but the indicator, unlike the previous one that I've shared, is a bit the downloading of it is a bit more complicated. Yeah, so I believe my will actually paste the link. There are 2 links over here. So the first one will actually guide you to actually download the dynamic zones chart William percent range. MPS means multi-time frame. Now the second link will actually ask you to download dynamic zone DLL. So you this file in your MT4 library folder. Otherwise, the indicator doesn't work. Yeah, so you need to download this. So the dynamic on chart WPR goes to your usual indicator folder, but before that, you need this file, dynamic zone DLL, in your libraries folder, MT4 libraries folder. Yeah. So if you do not know how to put this, just give me a heads up. So I just go through steps. But for those who have been watching my show, the steps are really this. Just go to MT4, open the data folder, locate your libraries folder, and put this file inside. This is important. Yeah. Otherwise, the indicators will not work. All right, Parage, is my still breaking up? Or is it clear or is it not? Yeah. So let me get. Oh, so it's clearer now. Good. Wait a minute. I see there's only one link there. It's cracking. That's really odd. Let me see if I can do anything. I've chosen the wrong mic. My bad. So this should be clearer now. Yeah, I hope it's clear for you all now. Yeah, just now I've chosen the wrong mic. Anyway, I'll post both the link on the chat at the moment. I think mine only actually posted one, so I just repost both of them. Yeah. So again, there are two links for this. I'll repeat myself. So you got to actually download this link, Dynamic Zones, put it in your MP4 libraries folder. This is very, very important. Yeah, all indicators that has dynamic zone in it, you need this DLL file. Yeah, then you download this dynamic zone on chart William percent range. MTF simply stands for multi-time frame. All right, so there you go. I think my friend is rather irritating, messaging me. So once you got once you downloaded the indicator, there's some chats. Let me check. All right. So once you download the link on it already, I just put it in. This is what it's called. So it's still based on a trend trading concept. All right. I'm not trading this. This indicator is certainly capable of trading reversals. Yeah, but it takes, I would say, it takes a lot more skills to do that. So let's go for the easy setups. Don't go for the difficult ones. So this is what it's named, dynamic zone on chart. Drag it in. Yeah. So I'm still going to base it on H4. I mean, I do trade D1, but D1 is a bit slow. Let's go for the faster one, H4. So you see multiple lines on your chart. Now, really go ahead and explore this indicator. These lines on the chart, in a way, it functions a lot like Bollinger Bands. Okay, but what I'm going to emphasize today is let's not pay attention to the lines that's in the middle of the bands, right? There's three dotted lines. So let me get rid of it. Those lines are not what I'm interested at. So it's a lot cleaner now. So this is what you have. Yeah. So the way to interpret this is that if price is outside of the band, right? That means it's not in the middle. Okay, it's outside. I'll change the color of the band while I'm at it. Just give me a minute. Yeah. Yeah. So if price is outside of the band, that means price, there's volatility in it, and price is actually trending. All right. If price is in the middle of the band, so we interpret it as price is very much ranging. right? It's not going anywhere. That's not something we are interested. Now, the line that you see here, the orange and green line, just simply indicates the direction, your directional bias. Right? So green is probably green means that price is trending upwards. Orange means that price is trending downwards. Now I won't be changing the line to red, so I hope you understand this entire portion. Right. So as per the concept of Bollinger Bands, if there's a squeeze, never mind, I'll get rid of that. Forget it. Just talk about this indicator altogether. So what you want to see is actually if price is trending below the band outside, you want to see the middle line orange. If price is trending above the band, you want to see the middle line being green. So that's the first part. Take note of setups only outside of the band, not within the band. And on top of that, if price is below the band, then you want the band, the center line to be orange. If price is trending above the band, then you want the center line to be green. Right? So outside of band, green line or orange line. So there's three parts to it. Now the fourth one, okay, which is what I would say the entry trigger. Once price actually broke out of the band, be it above or below, what you want is a retest of the band. And that's where your entry trigger is. That's all to it. Okay. Try not to pick the bottoms. It takes a lot more skills to do that. Same thing, try not to pick the top. What you want to see is that after price bottoming out, you want it to go, and what we want to trade is really the first retracement. That's what we are really aiming for. Same thing, if price more or less hits the top, don't trade that reversal. Again, why? Because it takes a lot more skills to do it. Go for the easy trade. Wait for price to actually go below, close outside of the band, a retest, and we'll trade the retest to go for short. Okay. So that's what we are looking for in terms of how to trade with this particular indicator. So let's just scroll back a few charts. Are my charts not showing? Just let me have a quick check. Yeah, my charts are showing. Probably there's a bit of a lag just now. Right, so I just pick this chart or scroll back a bit. Randomly pick Aussie in. Not that it really does matter to me. We just scroll back. So this is exactly what we are looking for. Price bottoming. I mean, we don't really know it's bottoming, but what we want to see is price. If you're going to trade upwards, for price to close upwards outside of the upper band, and for the line to be green. What we are wanting to wait for is for the retest of the uppermost band. If there's no retest, just let the trade go. There won't always be a setup. Okay. Go for the obvious one. So in this case, let's look over here. You can see that price in the middle. That means it's ranging, not that interested. Now, price, while it's ranging, this is not what we want to see. But once we break upwards, we tested the upper band. With the confirmation that the middle line is green, that's where we want to jump into a trade. The pending order upwards. And then let's look for, wait for price to reach your TP level. So again, try to always aim for the first trade because the first retracement is always the most profitable. You can see that price is in the middle. We are not interested. But once price broke out, we want to wait for price to retest the band. You can see this upper and lower band. But if there's no retest, forget it, let the trade go. All right, So let's go for the next one. You can see that over here, price is in the middle of the band. We are not interested. We want to wait for price to close outside. It does, but there's no retest in this case. You can see that price actually went below. Forget it. Over here, price is in the middle. We are not interested. It closes outside. Yes. Retest. Okay, then we will want to enter. So once we enter, this will be a stop. We will stop up. Okay, this will be a definite stop loss, but we have another chance to re-enter again. You see, all the conditions are still right in this case. It's still a retest of the outer band. The center line is still orange. And then the second time, price just goes down. So this is a rather easy way to trade. Over here, price is in the middle, we are not interested. Price is in the middle, we are not interested. Price is in the middle, we are not interested. Finally, price broke out, but there's no retest. So this is something that we are not interested to look at. Over here, price is in the middle, not interested. Price broke out, retest. We can enter, but this will be result in a stop loss. Okay, assuming your stop loss is below the bar. So this will immediately be a stop loss. Fine. But what happens after next? Price is in the middle, not interested. Price broke out, retest, stop loss, entry, price fall. This is what we are looking for. Let's go for two more examples. Price comes back in the middle, we are not interested. Price broke out of the lower band. Unfortunately, there's no retest. Forget it. The retest comes over here, and then price falls. Cool. And then retest again, you still can enter. And then over here, there wasn't really any valid retest. Price is in the middle, not interested. Price actually did broke out of here. Now this will be interesting. Let's take this for a case study. Price is in the middle, broke downwards, come back for a retest. Now at that point of retest, when this candle is formed, you can see that the middle line is actually turning to green. So this is something that is not an entry that we are looking for. If you're going to trade downwards, the middle line has to be orange. Yeah? And then finally, price is in the middle, not interested. Broke upwards. You see that the middle line is still green. We are really not interested. Finally, there's a test bar. You can enter. I don't know whether you hit TP1 or not. Otherwise, if you did not hit TP1, this will still result in a stop loss. Over here, price is in the middle, broke upwards. Now, this is, to me, this won't be classified as a retest. There won't actually be a retest anywhere over here. So we just have to watch price just goes off. All the way, you can see that price is in the middle. Finally, it broke upwards again. Yeah, so no valid retest over here, so forget it. Price closed downwards, but there's no retest. Again, forget it. No valid one, forget it. So you can see that just try to pick your trades. Don't go for all and every. Each and every won't really result in a good way. Finally, this is what we want. You can see that price is in the middle, broke upwards. Shortly, there's a retest. Okay. Especially the bars over here, you can wait until this bar. Middle line is green, tested on the upper band, and price just take off. So you can see that just by simply picking your trades, don't go for each and every one. In the midst of trading this trend trading method, you definitely get a few stop loss here and there. But each time, I think I've demonstrated enough is that when you see the price goes, it does give you multiple risk to rewards. Right? Most of the time, it gives you more than multiples of 2R. In this case, I don't know even what it's this. This has hit up to 10R. So really, it depends on where you set your take profit, how you want to set it. A simple way to do it is that once price actually close below the band, then just close the trade. Yeah, because it means that there's a change of momentum. This can be one way of taking profits if you're one of those traders that you can let your trade runs. So, what do you think of this indicator? William Person R dynamic zones. Let me see if there's any chat. Hi, Parish. Do you still need me to repeat from the start? Or do you all somewhat get it, the basic idea of it? Right. So the basic idea of this indicator is that anything that's in the middle of the upper and lower band, forget it, don't look at it. Interpret it as the price is really ranging. What will really get us interested is when price broke out of the upper and lower bands and then comes back for a retest. That's where we'll be interested in getting into a trend. Right, so you can see it here, price broke up, retests, right? And on top of that, the middle line is green, which confirms our bias that price is going upwards. So this is our entry bar. When you want to exit, you can base it on price actions. For me, if you're going to base it purely off indicator, just when price close, if you're going upwards, when price close below the upper band, then just take your exit on that. Yeah. Sometimes it gives you really good multiples of risk or reward. Other times it may not be that fantastic. Yeah. That's the nature of trend trading. Yeah. Now, if you guys really have difficulty in reading price actions, that means you really can't your price action, I won't say an analysis, but rather the candlestick reading is not that good. One alternative is actually you can feel free to pair it with an earlier indicator which I shared, which is the average candle. I believe I've shared this average candle in my second session. So this is what you can actually add into it. So it's an indicator over an indicator, which is nothing wrong with it, by the way. Yeah. So just adding with a bit of imagination, if you're going to trade upwards, let me get rid of the colors. Just to make the chart cleaner a bit. Right. So I've changed the color of the candles. If you cannot read price actions, fine. Right. The concept of the strategy, or should I say the concept of the indicator, is still pretty much the same. When price close, break above the upper band, and then go for a retest, as long as you have a strong candle that's denominated by the light green candle, that's your entry. When price close below the band, go for your exit. Simple as that. So again, anything that's in the middle, we are not interested. When price close above the upper band, we are waiting for retests. And this is our entry candle. Okay. So after retest is done, you see a strong bullish candle that appears. Enter. The stop loss is below. We can see that we almost hit our stop loss, and then eventually price flew up. You can see that it goes upwards. So this one again will give you multiple risk to rewards. Anything that's in the middle, we are not interested. In the middle, we are not interested. Price finally break the upper band, come back for a retest, and the retest is a strong green candle. Actually, before this retest, sorry, this will be a valid retest, but it won't get triggered anyway. Strong green candle, weak green candle, strong green candle. This will be an entry, but this will result in a partial loss because if you close it when price actually break below the upper band, this will be a partial loss anyway. And then move on forward, you can see that again, price in the middle, not interested, price broke. This will be a retest candle, strong green candle, entry above, you don't get triggered, entry above, this one you definitely get triggered, and then after that, you might have to exit somewhere here, which is a bit of a profit. This won't be a loss. So this is what happens if you mix two indicators together. Yeah, one for entry purposes, the other is more for looking whether you can't your structure analysis. Let me have a look at checkbox. Okay. So Nelson's, I'm using it based on 4-hour. Daily will also be applicable. So, I mean, all in all, I would say for trend trading concept, it is applicable in all time frame. I wouldn't say it's restricted to which time frame. What I'm sharing is just my opinion, how you can actually trade these indicators, how you can combine them against the specific settings. And now I'm just using the default settings. Yeah, but if you are really interested, then I would have to really advise you all to go back, do your own back test, and see what are the best setting points. Right. What are these bands? These are the dynamic zone on chart, William percent range. I've shared the links. I think mine has shared the links. I think somewhere above the chat, so you got to scroll and look for it. Yeah. So again, I'll repeat: if you're going to install this indicator dynamic zone on chart, remember to put in the dynamic DLL file in the libraries folder. Otherwise, this indicator won't work. Right. So what do you get? What do you guys think about this particular indicator? This is based, if it's not obvious enough, this is based on William percent range, right? This dynamic zone is based on William percent range. Okay. Currently I only have one indicator on my chart, which is this. The original look of this is this way. This is the original look of this indicator. Okay. You can actually implement more rules if you all like trading on the middle line. This is not something, at first glance, this is not something which I find really that profitable. Yeah. So for my simple backtesting, I'll prefer to trade. You see, in the middle, not interested. When price break and retest on the upper band, to me, these are the more profitable setups, because if it happens and if price goes, I think it's obvious that you can see price really just travel all the way. So in this case, again, another 10:1 risk to reward setup. So I think in any trading month, if you happen to have one trade which gives you 10 risk to reward, that would be a good month for you. Yeah. If most of you are somewhat there but not there traders, a 10:1 trade will easily give you, turn that mind into a profitable month. Yeah. I mean, it's not easy to lose 9 trades in a row. Yeah. Especially trading on a higher time frame. It's just not that easy at all. Yeah. You can actually apply this on a daily time frame. Again, I'll highly emphasize you all to change the settings. Yeah. Don't use the default ones unless in your backtest the default settings are somewhat profitable.
Right, so this is what I've shared today. Let me go for one last round to see if I have any questions. All right, so there's no questions. I hope this is useful to you. But if you are interested and you find that you want to know more about it, I think next session, just give me a heads up. I will see what I can do. Might probably cover it again. Yeah, if these indicators are what you're like. I mean, for this particular one. All right, so that's it for today. Thank you and have a great evening ahead.